All right. Hey, everyone. Welcome to another edition of Trading Bitcoin with your host, Tone Vays, coming to you live on this Monday morning, 11 a.m. New York time with the one and only Jimmy Song, as we get to talk some of the news events that have been happening in Bitcoin.
Hey
Oh,
everyone,
shit, my bad.
welcome to another.
God damn it. I was watching YouTube earlier. And we haven't done these shows in a while. We're going to try to bring it back at least once a week so we can get all our viewers up to date on the latest news from a technical perspective. Really wanted to have Giacomo on as well, but unfortunately, might have to wait till next week. Jimmy, how you doing, man?
A little bit tired. I did get to go to the Texas A&M Bitcoin conference over the weekend. So, yeah, great conference. It feels a little more normal now that, people are gathering together and doing stuff. There's also the beefsteak dinner on Friday, the Bitcoin devs meetup on Thursday. So it's been a whirlwind. I'm sure you know what that's like. It feels like old times, man.
Yep. All right. Let's go to the charts. We only have about 15 minutes. Right after this, guys, I will be doing an interview in Russian on the Forklog YouTube channel. So if you speak Russian, head on over there. All right. Screen share. Usually do this at the end, but I happen to have the page up. This is Jimmy Song. Since you haven't been on the show in a while, Joe Sad was on my show last time, and everyone was like, "Who the hell is that guy?" And so this shows you how many new followers I've gotten, though the views haven't gone up by much. I guess I lost a lot with my political rants. But hey, guys, this is Jimmy Song. You can check him out at programmingbitcoin.com. He is going to be teaching his workshop down in Miami next month. In early June. So about a month and a half from now, but we'll show this page again at the end. All right. So here are stories. Let's start off with, you know what, since I'm in Turkey, let's start off with that. So basically, Turkey has announced that they are banning Bitcoin payments. And this was the big story the other day. And I'm here in Turkey, was thinking about putting together a conference here in Turkey later this year. I may still do that. Now, this story is a little bit overblown, especially by
Tone?
crash, which we're going to talk about as our next topic. But let's explain this. All right. So Turkey has a currency that has not been doing very well. This was me looking at Coinbase stock. But if we look at the Turkish Lira, TRY, actually it's USD, TRY, the US dollar versus the Turkish Lira, and you will see how horrible the currency has been performing. So obviously the government is very, very interested in trying to preserve as much as they can of their currency, and they're not going to be very, very happy if businesses are accepting an alternative currency. Though I will say that if you want to pay somebody here in US dollars or in euros, they will have absolutely no problem taking that payment. But they are against a Bitcoin payment. Now, here's how this happens. A bunch of people go on the news and kind of announce, hey, my little shop that sells sandwiches is accepting Bitcoin payments, and the government doesn't like that and shut it down. No one in Turkey is paying anybody in Bitcoin. However, everyone in Turkey is into Bitcoin. Everyone is trading Bitcoin. A lot of people are buying Bitcoin because they want to preserve their wealth. Bitcoin is incredibly popular in Turkey. Almost everyone I run into, I was going parasailing here the other day, and all the guys that were like the parasailing instructors, like you jump with another person parasailing, I should probably release the video. All of them are Bitcoin traders. Was at a wine store the other day. There was a Bitcoin, like one of those physical Bitcoins, like the fake ones, of course, not the real one, on the freaking shelf. Like everyone here knows Bitcoin because of their currency problems. But the government just doesn't want businesses officially accepting it as legal tender. So this is completely, I mean, it's not good, but the news is certainly way more overblown than it really is. Jimmy, your thoughts?
Yeah, Turkey is going down the same route as China to some degree, right? They banned a bunch of stuff. I think it's extremely overblown. Nobody's using it to pay for coffee or whatever Roger Ver has been saying for years now. No one's doing that. What they're doing it for, what they're using it for is for savings, because there are no good savings vehicles. They'll even take the dollar over the lira. But yeah, they have like inflation rate of like 20%. So they're in the early stages of hyperinflation, it feels like. Do you see any evidence of that, Tone, or is that just like me
Well, technically, they're
pontificating
in
from afar?
hyperinflation.
Oh,
There already
wow.
is like hyperinflation is defined, not officially. There's no official definition of hyperinflation. But when I was like doing research for my presentations, and I was looking at all of the global hyperinflations, they're basically defined as a 50% devaluation of your currency in a 30-day span. So right
Mm,
here, uh, well, actually, that's only 9%. Wow. So if there was any stretch in time recently where the currency devalued 50% in approximately 1 month, that's pretty much hyperinflation. And here it's so maybe it hasn't like hit it in a single month, or maybe right there it did. This was in 2018. So like right here, I mean, I had it on my list as having, yeah, right there. So there you go. That's 50%, and that's from July into August. So that's pretty much it. So there you go. So by normal definitions of hyperinflation, Turkey already hit it. That's hyperinflation when you lose half your money in 30 days.
mm, I see. Yeah,
And
so I don't know. They seem like they're trying something that really doesn't have anything to do with anything. But they want to print lots of money and they want to blame it on somebody. So yeah.
all right. Yeah, so we're gonna wrap this up quick on Turkey. Look, no one is really spending it, and they have not banned you holding it. They have not banned trading. They have not banned exchanges. All that stuff could be coming. They could, ban it all. But as we know, Bitcoin can't really be banned because it's decentralized. And China did the opposite. I should probably ask my friend for an article. China acknowledged Bitcoin as an asset, something they've never
Mm.
done before officially from their central bank or from the other official channels. They've acknowledged Bitcoin as a legitimate asset, which is also very interesting. All right, so let's talk about the most likely cause of the actual drop in the price of Bitcoin, and that was a what do you call it? A blackout in a province of China that apparently has a lot of mining. And that caused 40% of the mining hash rate to basically crash. Now, Willy Woo pointed out that mining hash rate has a correlation on the price of Bitcoin. And it's interesting because if you remember, Jimmy, back in the day, years ago, we used to debate, does the hash rate drives the price or does the price drive the hash rate? I to me, it's obvious. The price of Bitcoin drives the hash rate. But these incidents like this, where the 40% drop in hash rate, causes a 10% drop in the price of Bitcoin, or whatever it fell, like 10, 15% drop in the price of Bitcoin, really quickly, mostly due to panic. And of course, the hash rate has its effect on the price. But on in the bigger picture, it's the price of Bitcoin that is driving more hash rate. And of course, this news is driving all kinds of speculation of how centralized Bitcoin is, which is ridiculous. How could China, have one province have 40% of the mining? And of course, all the Bitcoin haters get to say their piece right now. So, what is your, overall take on it? And then either I'll ask some questions or we'll dive a little deeper into it.
Yeah, my gut feeling is that this wasn't the real reason for the price drop. The price drop seemed to me the result of Dogecoin fanaticism or whatever it was. Dogecoin's been pumping like crazy,
Yeah,
and
we're
then
gonna
when
look at
it
the we're gonna
fell,
look at the
yeah,
chart. We're gonna look at the
yeah,
chart. It's on a daily MRI top today.
Yeah, so I think it has something to do with that. But this is more a jurisdictional, risk factor, and this is a region that has a lot of electricity and not that much consumption of that electricity. So miners tend to go there. But they seem to have had a blackout, which caused a lot of the network hashing power to go down. I think you're right that, and I think I've said this on the show, that it's price that drives hash rate, not the other way around. I know that mining is insanely profitable in many parts of the world. Even if you're having to pay a little bit more for the electricity. So this tells me that a lot of these miners, they were trying to get the cheapest electricity, but then you get blackouts like this. They just lost a ton of revenue. They'll probably go somewhere else where it's a little more predictable, because you do get situations like this in China where people will just, some official will cause rolling blackouts for really like not a very good reason as far as I can tell. So jurisdictional arbitrage means that you might take slightly more expensive electricity somewhere, but where it's actually easier to where it will be harder for a regulator to shut you down. So yeah, that's my gut feeling, but I don't know, we could talk about that.
All right, so going over. By the way, guys, Willie Woo is coming on the show Friday. So Friday, I guess early morning, New York time, we will have Willie Woo on the show. Okay, so Willie Woo points out that there is some correlation between the price and the hash rate. So you can see right here uh, where we drop in the hash rate, we did drop in price. It wasn't identically correlated, but he also pointed out to some parts in history where right here back in November, there was a huge drop in the hash rate. I don't remember why.
It's
And
I think the end of rainy season in certain parts of
yeah,
China.
we
Yeah.
did cover that part. And you saw the price pull back as well. Um, so there is some correlation there. And the hash rate has mostly already recovered from that big drop. So we are expecting Bitcoin price to recover as well. All right. So now here come the tough questions, right? So this is where all of the haters start to talk shit about Bitcoin. If it's so easy to remove 40% of the hash rate, China could do a coordinated effort and potentially remove 60% of the hash rate in a single day, or China could have a coordinated attack on all of its miners, confiscating all the miners. And while I personally did not think that 60% of all of Bitcoin hash power comes from China, it is possible. And what if China does decide to do that? What does that mean for the Bitcoin network, Jimmy?
Well, so I wrote an article called "Debunking the Empty Block Attack," and it's really along the same lines, and it's talking about what happens if how would China get 51% of the miners and all that. And I get into like extreme detail in that particular article about it. And this is kind of similar. Yeah, there's the article. You can read exactly why I think that this is stupid FUD. And there's I did have a debate with the guys that were proponents of this attack and saying that Bitcoin is bad for that reason or something like that. And you can if you were around, you know what I said. But basically, it's going to be very difficult for a government to just grab all of this hash rate, because as soon as you grab one, then everyone else is just going to try to get it all out of the country. So you have to do this massively coordinated thing where you probably need the military, you need all of them to act at the same time to go grab all of these miners. And even before that, you need to make sure you know where all the miners are. If you're wrong on where the miners are and you miss a bunch of them, they're probably going to escape the country or something like that. And grabbing all of that hash power is not the end of the story. You also have to have trained personnel to run all of this equipment and make sure that it's running smoothly. That you have software engineers that can actually figure out how to do these attacks and so on, and not make it detectable that by the network. And I get into all of that in this article. So please go read it if you're concerned about the 51% attack. And it's ultimately the conclusion I come to is that economically it's way better just to mine honestly. And I don't think any government has the stomach to sustain any sort of attack that the rest of the network can't thwart.
All right. And a more, crazy idea, and actually I was discussing it today here in Turkey. What if, let's say, we know that the US, China, and Russia don't like to play nice with each other. They're pretty much adversarial. But let's say the Bitcoin becomes their common enemy. It's actually least likely in China. Like, I'm more concerned about Russia and the US being anti-Bitcoin, but I find it hard to believe from China that they would be so anti-Bitcoin. It just doesn't feel that way. I know they want their own digital currency and they want, control the people. And we can also talk about China all day. As a quick side note, before I know I'm like interrupting myself here, I'm here with a friend that does a lot of business in China, and he explained how the Chinese social credit score system works. It's that Black Mirror episode where you have, your social credit score, and if you don't have, 4.5 stars out of 5, you can't really do anything. And he explained kind of how that came about, in that China expanded really, really quickly, and they built these major modern cities in rural agricultural towns that are now were basically a lot of farmers went into the modern city, and they just don't have the proper etiquette. They're like spitting on each other, spitting on the street. It was just kind of embarrassing to have. And the reason they like initially implemented this is to kind of force people to have better etiquette before they go to other more civilized parts of China, as politically incorrect as I just stated that, and B, outside of their own country where they may potentially embarrass the country. So they implemented this social credit score in order to kind of make people that otherwise don't know how to behave themselves be more respectable to outsiders. Now, of course, all things with good intentions lead to complete and utter disasters, where now this social credit score system is gonna spread all around the world, to where your political thinking is gonna basically prevent you from going anywhere. But it kind of shows how their intention might have been slightly on the good side. The outcome is absolutely disastrous. But having said that, I think the economic stimulation of Bitcoin and Bitcoin mining is going to make the Chinese think twice about banning it. And the same especially goes for a place like United Arab Emirates, where everyone seems to be right now, besides Miami and potentially Texas, where they are absolutely loving all of these, rich crypto people coming into their state, coming into their country, coming into their cities, that they're going to be very, very open to all kinds of ridiculousness in blockchain, even the scammy parts of it, in order to capture that part of the market. So I see it less so coming from China than America, because America is trying to keep a grip on money laundering laws and monitor every transaction in the world. So I think US will be more adversarial, even though we now have senators and congressmen and women and the financial sector, which some people think own the government, more open to the crypto space as they're getting in. So okay, so wait a minute. So that was my tangent. But now to the real thing. What if Russia, China, and America decided to coordinate and shut down all mining? Well, we raise the same question with exchanges. Well, let's talk about mining and like cripple 90% of Bitcoin's hash power. What happens, Jimmy?
Well, even if you crippled 90%, the other 10% is just going to chug along, and it'll adjust. It'll take a few months for it to adjust. So let's see, 2 weeks times 10 is about 5 months before you get that first difficulty adjustment. And then the second one will happen like a month later, something like that. But by then it'll be all normal. They'll try to attack it, I guess, but it's ultimately not going to be that effective unless they can like disguise themselves really, really well, at which point it's kind of hard to tell that they're not just contributing to Bitcoin. So yeah, I don't see any real like effective attack unless they manage to double spend a few exchanges or something like that. Evidence seems to be when people get when certain entities get double spent, it's their problem, it's not the network's problem per se. So yeah, I don't think it's that big a deal.
Right. Of course, it will. I mean, if all that hash power comes offline, Bitcoin transactions are going to be very expensive and very slow for probably a few months, and then the difficulty will reset.
That's right.
My answer, my answer to this is another country that is flying under the radar with Bitcoin mining is Iran. And good luck, America, coordinating with Iran to shut down Bitcoin mining. Another one is Venezuela, who are also mining Bitcoin. So if the US, Russia, and China, and Canada and Australia decide to end all mining and ban all of their citizens from, becoming financially independent and financially wealthy off of Bitcoin, you're basically going to cede power to your biggest enemies who are going to do the complete opposite of you.
Yeah, there's we don't really know who's exactly got the miners, and I'm sure that will continue to change over the next few years.
All right, so moving on to another story. I think this is our main topic. Going on with the Taproot activation, because I was tagged in tweets by a Bitcoin maniac who does not have a very large following, and he has a YouTube channel. And I actually watched one of his videos earlier today about the recap of the 2017 fork wars, and everything he said was completely accurate as to what happened. And he was there at the time, and he was fighting for SegWit and user activated SegWit, of course. I'm just not very familiar with his work. Goes by Grass Fed Bitcoin.
Hey, Tone. Oh, Tone. I don't know, guys. I don't know if it's me or him. Yeah, it looks like it was him. So we're gonna wait for Tone to come back, but we are going to talk about Taproot and what's going on there. Please wait while he gets back online. I don't think the internet in Turkey is all that great, which is why this is happening. I think it might have happened earlier. I thought it might have been me, but yeah. Well, where is Tone? Oh, Tone. Yeah. So it's kind of yeah, you guys are just kind of watching me. But here's what's going on with Taproot. We had two different clients. One that's within core. It's BIP9 based. So the activation window, the speedy trial activation window starts, I think, on the 25th, or no, yeah, I think around the 25th, or to 30th, somewhere around there. I can't remember exactly, but they're going to start the activation process, and if enough miners signal in a single difficulty adjustment period, then everything will be fine. The All right, so Tone's back. Tone, your internet sucks. And for some reason you're not showing up at all. So I'm all right, there's a second Tone. Okay. There you
Hey,
are.
my bad. Yeah,
Yeah.
I'm running my own hotspot. I don't know, internet went down. It's okay.
Yeah.
Right. Sorry, go on. But I was the one that really wanted to listen to this. But no, but just catch up.
Yeah. So basically you have Taproot that's happening. And the activation method has been pretty controversial, largely because of lock-in on timeout being true or false. Luke Dash, Bitcoin mechanic, like the guy that you were showing, and several others really want LOT equals true. It's and that basically means that the soft fork will happen whether or not the miners agree to it or signal for it or not. It's more a guaranteed user activated soft fork. A lot of developers wanted LOT equals false, but that split was sort of mitigated by something called speedy trial, which was, hey, the miners are pretty much all signaling that they want to signal true for this. So why don't we just try it for 3 months, and then we'll come up with a different plan if they don't activate it in those if they don't signal readiness in those 3 months. And among other things, it was, there would be 6 months after the speedy trial to get everything ready, and all that. They were arguing about that, and then there was a second argument that came along, which was, how do we do speedy trial, right? Like, is it going to be block based? This is BIP8, or time based, which is BIP9. Every soft fork before this, we've done time based MTP BIP9, but there were some people that wanted to do BIP8, so there was an argument there as well. So as a result, what got merged in was time-based LOT equals false into the Bitcoin client. But some people felt like that wasn't enough. So Bitcoin Mechanic, Luke Dash, and some others have created the LOT equals true and a BIP8 based activation. So somehow those two conflated. So now you have two clients. It doesn't matter much as long as the miners signal that they are ready. So, if they do signal that they're ready within the speedy trial time period, which I think lasts 3 months, all indications are they're going to indicate readiness right away, in which case it will lock in like middle of May, and we should get speedy trial. We should activate Taproot 6 months after the middle of May, which would be about November 15th. And we would be good there. But yeah, there's a lot of drama over really niche arguments, besides LOT equals true or false. But like, it really doesn't matter unless the miners refuse, which all indications are they're not going to refuse.
Right. So these guys are arguing over how the speedy trial is to be in
Yeah,
signal.
there were two arguments. There was one on LOT equals true or false. That was a
Right.
big one. But then speedy trial seemed to put a damper on the LOT equals true or false, because it was just like, let's just try it and then we'll argue about it if the miners don't agree. It was just sort of kicking it down the road in case the miners, like everyone's concerned about this very small probability scenario. With speedy trial, we can just find out very quickly. And everyone pretty much agreed to that. But then the activation method for speedy trial became a contentious point, particularly between Jeremy Rubin and Luke Dash Jr. And now we have MTP, which is merged in, and so we're going to get it. So it's been merged, and the client will be released, and miners will be signaling, I think, starting I think around April 30th or something like that. So we got like 2 weeks after that. It'll probably lock in, but who knows?
Maybe, but speedy trial was going to be. Well, I thought speedy trial was a 3-month thing, but no, it's a 6 weeks.
Well, there's 3 months to get 90% signaling within a 2-week period, right? Like it's like what we did with SegWit, right? But the 2 weeks. The first 2-week period starts, I think, like April 30th or something like that. So you get 2 weeks, and then if every and all indications are miners are all going to signal readiness, at which point it would get locked in, and then 6 months after that, then it actually goes live on the network, which would be about November 15th or so. But yeah, that's all of this arguing was about this low probability scenario where miners would do something nefarious and you would need user activated soft fork or something like that.
All right, so it doesn't seem like it's that big of a deal, because it seemed like a big deal over Twitter. All right, final topic, and only because some people were concerned and they reached out and pointed it out. I actually didn't even know about this, but I did read about it. And one of these days, I got to get Adam back on the show. But Blockstream is launching a token. It is called BMN token. And I do want to, describe it from their blog post a little bit. So what a lot of people don't know is Blockstream started mining. So there was a Blockstream mining operation, and they are selling what looks like cloud mining contracts. Now, there's a lot of concerned buzzwords that will happen throughout if you read this post. Blockstream will have a United States mining operation, and they are going to sell you hash rate. Like, you can buy hash rate that they operate. Now, you would buy this hash rate in the form of a token backed by that hash rate. Now, normally when I read something like this, all kinds of alarms of scams come in. But again, because a lot of this stuff is created by scammers. In this case, it's being created by a U.S. company, regulated company, an important company, and a company with, so far, a good reputation in the space, contrary to what the big blockers will have you believe. Now, this token is actually not for Americans, and this token is a security token that is compliant with all kinds of regulations. So this is not what we would call a shitcoin. This token is backed by X amount of hashing power. Now, whether that hashing power makes you money or not is really unknown based on how the mining game goes. And right now, mining is pretty profitable. Their mining operation is in the state of Georgia in America and also in Quebec, Canada. You can read more about it here. I should probably put this link in the video description. This token is being launched on the liquid side chain of Bitcoin. So the underlying fundamentals are strong, but that is the general idea. And I'm not sure if a single token is worth 200,000 euros, or you have to buy X number of tokens for a minimum investment of 200,000 euros. But that's how they are basically selling it. So those that are concerned, please go ahead and read this blog post and read more about this. Jimmy, your initial thoughts on this? I know we did not prep this story, so you may be hearing about this for the first time.
No, I've heard of it. From what I understand, it's an institutional offering, so it's nothing like cloud mining in the sense that it's aimed at retail or whatever. It's aimed at institutions. There seems to be demand by institutions to get some access to, freshly minted coins or mining exposure as a way to hedge against something or other. And that kind of makes sense. I still think it's better just to hold Bitcoin, but for some institutions, they would like mining, the ability to mine their own coins. And this is a way to do it without having to set up physical facilities and all the expertise that comes with it. They're doing it via these tokens. I still don't know how great that is, because if the token gets stolen on Liquid, then now you own some of the profits of this company. I'm not sure how all that works. But I mean, that's this is the Oracle problem again. But I suppose if it's tightly, managed through selling only to institutions and whatnot, this could work.
All right, so let's break this down a little bit further. You're right. It's not like cloud mining, but like the general concept is, right, you're paying someone else to mine for you. So when you pay someone else to mine for you, it's not like you're connecting your miner to a pool. You're literally giving someone your money, and you are buying mining contracts from them. So to me, I just use this general term cloud mining, and most of it is scammy, but some of it is actually legitimate. There's real mining going on. Do you want to break down, do you have what's your definition of cloud mining?
Cloud mining is selling to retail some amount of hashing power and the revenue that comes with it. A lot of these cloud mining services will sell you sort of at rip-off rates and give you exactly what you would have gotten if you actually had miners. But it ends up, of course, very unprofitable to the user. It's because they can't do the math or predict accurately what the hashing rate will be months or years from now. So that's generally the scam. And it's, people get enamored with mining because they think they're making their own money. They just don't realize that the global trend tends to go towards the price of a price of mining a Bitcoin tends to go towards the price of one Bitcoin, right? Like that's so it's not a very profitable business, but it's sort of taking advantage of that ignorance. This one is doing something like that, but for institutions, and of course they can definitely do the math. So it's not scammy in that way, but some institutions want this exposure for various reasons. They might even be losing money, especially relative to Bitcoin, but they're doing it as a way to secure the Bitcoin that they have, and as a way to keep the network robust and maybe protect themselves from mining outages and things like that we see in China.
Right. Well, though, to me, there's like your explanation of cloud mining is not much different than mine. You're just using retail versus institutional, which to me is pretty. In this case, I mean, the idea is the same, right? It's just I believe individuals could buy this as well, as long as they have the large upfront capital and they're not Americans. So this is for non-Americans, probably due to horrible U.S. regulations. Even though they're mining facilities in the U.S., they can't sell it to retail in the US. Maybe they can sell it to institutional in the US. I guess they're trying to look for a more sophisticated investor. But to me, this is the idea of cloud mining. Basically, someone else is mining for you with their equipment, but you get to take in the profit. And of course, most cloud minings are complete scams where there isn't even mining going on. Others are partial scams where there is cloud mining going on, but they completely rip you off on the terms because you don't understand how it's done. And that I shouldn't call those total scams. I mean, if you don't read the contract and you don't understand what you're doing, maybe you shouldn't be investing in cloud mining. So the real scam is the cloud mining operations that don't even do mining versus the ones that do, and from the ones that do, it's based on the terms of the contract. Now, a lot of people, especially our audience, because our audience is pretty sophisticated, they're all screaming in the live chat, you don't need a token and for this. And they are probably right. You don't necessarily need a token, but the liquid infrastructure is there and it allows you to create a token. In fact, if you go to Blockstream's website, they have a hat token on the liquid sidechain. Basically, one hat token gets you one hat from the Blockstream store, and it's it's a token on the liquid sidechain. Well, I don't really. I've seen a video on it. So here, a Blockstream hat, and you can buy this hat with a Blockstream token. Now, does that token need to exist? No, it doesn't need to exist. You can pay for the Blockstream hat with US dollars. You can probably pay for it with a credit card. You can probably pay for it with Bitcoin. But if paying for it with Bitcoin, you'll have to pay a bit of a fee. You can pay for it with Lightning for a smaller fee. But you do have an option for a hat token. Now, this is going back to this token in particular, because unfortunately, I have another interview in about 10 minutes. How do I explain it? So it all starts with, where is this token being created on? If this token is being created on some scam chain or something unstable like an Ethereum or Tron or God knows what else, that is a technological concern. For me, if you're going to build a token, you need to build it on top of the only decentralized, secure and blockchain that I expect to last for a long time, and that's Bitcoin. So if your token isn't built on Bitcoin, it's already problematic. This token is obviously built on top of Bitcoin, so the technological side of it is at least secure. Now we can talk about whether this token is needed and what are the advantages. What are the advantages of having this token? The only thing I can say is the advantage of having this token is, I guess, ease of transfer. You own X amount of hash power from them, and you want to transfer it to another individual, and you can do that in a simple way by transferring it. The drawback is, of course, what happens if you lose access to your token, or as Jimmy said, what if the liquid network has a vulnerability or whatever, your smart contract of those coins, something happens to them. So that's the trade-off. Does it have to have it? No, it doesn't. But we're going into a world where these blockchains, and whether it's Ethereum or the other ones, or the liquid sidechain, which has the same functionality as Ethereum, they are creating the infrastructure to easily move something of value from one person to another, because it's harder to do with Bitcoin because of the 1 megabyte block. But the liquid sidechain allows you to move a token with some kind of an underlying value, whether it's a fraction of a real estate, if we're talking about a real estate well, you guys know what I mean, or we're talking about something like this or other use cases. Can this be done with an Excel spreadsheet as a Google Doc? The answer is yes, it can, but this has slightly more sophisticated functionality that you may or may not choose to use. But does it absolutely need a decentralized network? The answer is probably not. Jimmy, your take.
Yeah, I mean, The liquid network gives you a couple of properties that are very hard to do as a centralized entity. One is confidential transactions. So you can essentially transfer these tokens from one to the other, and the central party doesn't know who did it, right? That can be an important property, especially if you're trading in something that you don't want your competitors to know about, or if you suspect that your broker or dealer is selling that information or something like that. That sort of thing can be very important. So there's that piece of functionality. I don't know if it's necessarily useful for this particular thing, but it might be. And you can kind of prove it because the tech is all there. There's no central controller that is going through and reading, what the actual thing is. So it's useful to some degree, and I can kind of understand it. But yeah, I mean, they might like for this particular use case, they probably don't necessarily need it. But there is something to be said about the features that they've put in there that you can only really do in like a federated system like they have on Liquid.
It's also a lot harder to confiscate these things, right? Let's say you bought them and then your jurisdiction, made this illegal. That jurisdiction would have a hard time confiscating it from you, so you'll still be able to, move them and sell them.
Probably. I mean, it depends on whether or not they know who you are. And that's the big thing. So yeah, they kind of go hand in hand there a little bit.
All right. I'm sorry, Jimmy. So people are screaming that something's going on with the Bitcoin price, and also I do have another interview at the top of the hour. So real quick, we're gonna promote your stuff a little bit. Please check out Jimmy Song's work at programmingbitcoin.com. He has several books which you can find here: Programming Bitcoin, the little Bitcoin book for beginners, and Thank God for Bitcoin, for a slightly different perspective on what makes Bitcoin good. And also, you want to talk about your upcoming workshop?
Yeah, click locations there, not schedule. Yeah, I am going to be doing my seminar in Miami, June 1st and 2nd. So if you are interested in learning the Bitcoin protocol and you're a programmer, please apply. I also have some scholarships available to those that can't necessarily afford it. And I'm getting more scholarships than I thought I would be getting. So please apply if you are technical. There's a lot of people that have taken this course, many of whom are extremely deep into the Bitcoin ecosystem, whether through a company or as a core contributor or whatever. So please apply if you are interested. And yeah, I'll make it happen.
All right. Also, second time this happened already, you may want to either change the background to dark or the text to dark, because I think
there's a background picture that's not loading for some reason.
Oh, okay. It's not loading for
yours,
me, maybe. Okay.
Yeah.
But it's there. All right.
Yeah.
I'm going to quickly take a look at the price of Bitcoin, see what's going on. Also, one last thing on the BNB token. This doesn't mean that it's a good token. Just because it's honestly created doesn't mean that you should buy it, especially you should buy it as an investment. Those are completely different things. We're just talking about the underlying mechanics and the potential for its need. Those are completely independent of whether this is a good idea to actually own for you or your business. Completely independent things. Okay, let's talk about the price. Oh man, we're dropping again. That's not good. I was really optimistic this morning when I woke up in my time zone and I saw that Bitcoin was $57,500. That was looking really, really good. I know we missed my close at 57,500 last night. This is where the candle closed at 56,200. I was really hoping for 57 and a half. We had 57 and a half a few hours ago, but it's dropping right now. It actually happened during our show, Jimmy, pretty much in the last hour, in the last 2 hours, actually. So I actually wasn't looking at it in the last 2 hours. That's when it started to drop hard. I'm waiting for my MRI to load. This is not looking good, guys. I may have to be turning bearish here a little bit. because I thought that this would be a beautiful rebound and then we go up from here. But the TA is now turning the hourly chart. If we close below the support line, I don't believe in double bottoms. I don't believe in double tops. And this is very concerning for me in that we would now have the second lowest hourly close since the big drop, not counting this final capitulation where I went bullish pretty much perfectly. But right now, I would not want to be in any, I wouldn't be catching any knives right now. I was catching my falling knives here yesterday. I would not be anywhere near catching falling knives at the moment. This to me looks very, very concerning. This is the 4-hour chart, and the 4-hour chart is now resetting for a new wave down, and the next candle would give me one of those red stars. Moving up to the daily chart, while yesterday was looking good, holding the big moving average, and this morning opening at the 50 period moving average and going up for the day would have been a potential replica of this situation that took place at the end of March. This here is very concerning because now we'll have a full candle opening and closing below the 50 period moving average. That is a very nasty environment, and that also takes out all the bullishness that took place in the second half of the day yesterday. This also completely alters the um, the weekly chart, because just like the weekly chart, we now have a candle that is opening and closing fully below the 7 period moving average, something we have not done for a long, long time. So as much as I hate to say it, but the action in the last 2 hours is very, very concerning for me. We do need to wait for the day to end and probably one more day tomorrow, and ideally for the week to end. But we could be on a path down to the 20 period weekly moving average, something we have not touched in a long time. Something like this, where we had a much bigger pullback. So, as you guys know, I was calling for this big double top in Bitcoin. But I might by end of day. So I may be, exiting that GBTC position after all and waiting for a better buy the dip. But this will have to be it for me. I got to jump on another interview with Forklog in Russian. But today is a very, very concerning day just based on what happened in the last 2 hours. I'm going to stay patient personally and wait, but this changes the picture quite a bit. And on a daily scale, we can certainly fall down into the 40s and touch the next area of support, which will probably be the combination of the MRI support plus the moving average. And that is a dip I would be very interested in buying somewhere in the $47,000 range. That would be ideal at this point. Let's just make sure if the day rallies and closes back up above the moving average, it'll all be in the clear. But if it doesn't, that's very concerning.
Interesting. I have noticed that this is we're currently slightly above the stock to flow model price, so it may just be kind of like mean reversion here. What do you think about that idea?
It could be. It could be just consolidation, but as Willie Vu points out, long-term holders of Bitcoin are buying this up like crazy. So this is temporary. Even if we fall back into the 40s, we're still going significantly higher later this year. We are in a secular bull market, and I remain pretty damn bullish on Bitcoin right now, and on a big picture. But on a daily picture, it's not looking. On a short-term picture, it's fucked. But on a daily picture, we need to wait till end of day. On a week, the week just started. It started really bad, so it's too early to tell on the weekly. But the daily, we will know very, very soon.
Yeah, sounds good. I will be doing a Clubhouse read through of my newsletter that got sent out this morning. For those of you that want to join me, it'll be at 11:15 Central Time.
All right, guys, that is it. If you want to, learn more about trading, you can check out my free Learn Trading tutorial, or go to products and services and check out On Demand and the MRI, which is one of my indicators. All right, I didn't get a chance to look at Doge. Oh, damn. Doge is on an MRI top, but it's consolidating at the top. So as much as I hate to say it, Doge is actually still bullish, ironically. Bitcoin isn't, but Doge kind of is. Ethereum looks screwed, but Doge actually looks pretty good. It's probably sucking some of that Bitcoin volume out. All right, now I gotta go. Thank you all so much for watching. I'm already late for my next interview. Head on over to Forklog for the Russian speakers. Bye, guys.
Fiat the Lendas.